Usury, the practice of lending money with interest, has been condemned across religions and cultures for centuries, yet it thrives in modern financial systems, shaping economies and deepening inequalities. Why was it forbidden, and how has it come to dominate the world today? Let's uncover the lessons from history and scripture. Religious traditions across faiths have consistently condemned the practice of usury. In the Torah, the Bible, and the Quran, charging interest on loans is explicitly prohibited as an exploitative act. The Torah instructs, "If you lend money to my people, to the poor among you, do not act as a creditor. Charge him no interest." Exodus 22:25. Similarly, in the Christian tradition, Jesus drove the moneylenders out of the temple, rebuking them for turning a sacred space into a den of thieves, as recorded in the book of Matthew. "My house will be called a house of prayer, but you are making it a den of robbers." Matthew 21:13. The Quran, too, unequivocally forbids usury or riba, describing it as oppressive and unjust. It warns, "Those who devour usury will not stand except as one stands who is being beaten by Satan into insanity. That is because they say, 'Trade is just like interest.' But Allah has permitted trade and has forbidden interest." Surah Al-Baqarah 2:275. These sacred teachings highlight principles of fairness, compassion, and justice, urging humanity to avoid exploiting the vulnerable for personal gain. Despite religious prohibitions, usury found ways to thrive, particularly in medieval Europe. Restrictions initially kept the practice in check, but loopholes and evolving definitions of interest allowed it to flourish. Over time, banking systems institutionalized interest-based lending, tying economic growth to debt. By the 19th and 20th centuries, global financial systems were deeply rooted in interest-based transactions. The modern world continues to grapple with the consequences of usury. Lending at interest exacerbates wealth inequality, allowing the rich to grow richer while trapping the poor in cycles of debt. Furthermore, the prevalence of fiat money, currency not backed by tangible assets, has amplified the issue. Fiat money can be printed at will by central banks, leading to an oversupply of currency. This devalues money over time, resulting in inflation. Borrowers repay loans with interest in devalued currency, while the purchasing power of their income continues to shrink. This dynamic disproportionately harms those with limited resources and deepens economic disparities. Interest on fiat-based loans perpetuates this cycle, as rising inflation makes borrowing increasingly expensive, driving further inequality. While the challenges are immense, there are ethical alternatives to usury-based systems. Islamic finance, for example, prohibits interest and instead promotes profit-sharing arrangements, where risks and rewards are shared equitably. The Grameen Bank in Bangladesh pioneered microfinance, providing small, interest-free loans to empower the poor. Community credit unions also focus on fair lending practices, ensuring accessibility without exploitation. Crowdfunding platforms have emerged as another modern solution, enabling individuals to fund projects directly without oppressive terms. These examples demonstrate that fair and just lending practices can uplift communities and foster economic justice. Usury continues to pose a significant challenge for societies aiming to uphold fairness and empathy. Religious teachings underscore the perils of unchecked greed and exploitation, calling on humanity to uphold principles of justice and fairness. Reflecting on the lessons of history reveals that ethical and sustainable economic systems are not merely aspirations, but essential foundations for a balanced and equitable world. Thank you for watching. Let us work together toward a brighter future by rejecting systems rooted in usury and embracing fair and principled economic practices.